Welcome to the deep dive. Our aim today, like always, is to sift through all this source material we've got, often pretty complex, sometimes contradictory, and just pull out the essential insights you need.
And today, we've definitely got one of those situations, a real Web3 naming puzzle. We're looking at the ticker ASTR, but as soon as you start digging, you find, well, you're actually looking at two completely separate, massive projects.
Yeah, almost identical branding, multi-billion-dollar valuations. It's tricky, so it's kind of a mandatory 2-for-1 deep dive today.
Exactly. Our job is to untangle this for you. We need to clearly separate Astar, the decentralized exchange, ticker ASTR, from Astar Network, the Polkadot parachain, ticker ASTR.
Right. We'll break down what each one actually does, look at their market situation, and figure out the stories driving their value right now.
And let's kick off with the one making all the noise lately because of its, frankly, crazy price swings. Astar, the DE.
Okay, Aster the DEX, let's unpack this. The sources show it handles both spot trading and these high-stakes perpetual contracts. And it's not exactly brand new, is it?
No, not really. It's actually the product of a merger back in late 2024. Two existing DeFi players, APX Finance and Astherus, they came together to form Astar.
Ah, okay. And that merger relates directly to the Astar token we see trading now.
It does. The current Astar token came from a required one-for-one swap from the old APX token. And there's a deadline coming up fast, October 1st, 2025. That's when APX stops trading on the major exchanges.
So that basically pushes everyone into the new Astar token, cleans things up, forces the consolidation.
Pretty much. Draws a line under the old identity.
Okay, so with that background, why all the buzz around this particular DEX deck? It's clearly aiming high, calling itself next gen.
Well, it seems built for the serious trader, not necessarily the casual user. It's multi-chain for starters, BNB chain, Ethereum, Solana, Arbitrum, so broad reach.
But the real hook seems to be these specific features, right? Especially for advanced users.
Absolutely. I mean, beyond the usual crypto perpetuals, the big headline is offering 247 perpetual trading tied to U.S. stocks.
Whoa, okay. U.S. stocks, but settled in crypto.
Yep, settled directly in crypto. And they're offering up to 100x leverage on those.
Right.
That's significant leverage and capital efficiency, bringing TradFi-style products into DeFi.
100 times leverage on stock derivatives. Wow. And it's across all those chains you mentioned.
Across those major chains, yeah. Positioning it as a central hub for that kind of trading.
And they have tools to manage trades at that scale, I gather. You mentioned something called hidden orders.
Right. This is fascinating and really speaks to who they're targeting. The sources say it's loved by whales.
Hidden orders sounds intriguing. What does it actually do for a big trader?
It's like a cloaking device for big trades. When a whale puts in a huge buy or sell, only the smallest possible bit of that order shows up on the public order book.
Ah, I see. So the true size, the bulk of the order, stays invisible.
Completely invisible. It means they can execute a massive position over time without immediately signaling their intent to the whole market.
Which stops bots and other traders from front-running them and pushing the price against them. Makes sense. Control and discretion.
Exactly. And they double down on capital efficiency with collateral. You can use things like liquid staking tokens, example given as BNB, or even yield-bearing stablecoins like USDF.
Okay, hold on. Using a liquid staking token as collateral. Why is that a big deal for a trader?
It's about making your money work harder. That token is already earning staking yield somewhere else, right? Now, you can also use it as collateral to trade or borrow. Your capital isn't just sitting there.
Got it. So it's earning yield and backing your trades. Efficient.
Very efficient. And one last crucial bit on the tech side, it runs on its own Astar chain.
Its own layer one, not just relying on Arbitrum or BNB.
Correct. Described as high performance and privacy focused. That dedicated infrastructure likely helps them manage the speed and complexity needed for those hidden orders and high leverage across different chains.
Okay, so sophisticated platform, dedicated chain, unique features for whales. Yeah. Let's connect that to the market reaction, because the price action has been, well, dramatic.
Dramatic is putting it mildly. The numbers are pretty staggering. Market cap around $3.14 billion now, putting it somewhere in the top 50 cryptos.
But how it got there is the crazy part, right? The timeline.
Yeah, just look at this. The all-time high, around $2.41, was hit September 24th. That's only 4 days before our source date.
4 days ago, and the all-time low.
Get this, around 9 or 10 cents. And that was recorded on September 17th, just 11 days before the high.
Right, so basically in less than 2 weeks, it went from under 10 cents to over $2.40.
Precisely. That kind of move isn't just random market noise. Over 30 days, it's up 190%. over the last year, over 2,200%.
2,200%. Okay, that screams institutional interest. There's some very powerful narrative at play.
And the sources point directly there. We have confirmation from CZ, Binance's founder, saying Astar competes with Binance. But also helps the development of BNB. It's a weird dynamic.
How does that work? Competing but also helping. Sounds contradictory.
Well, think strategic investment, maybe a hedge. The sources confirm Astar hired ex-Binance people and got backing from YZ Labs.
YZ Labs. That was Binance Labs before, right?
Exactly. So while Aster DEX might pull trading volume away from Binance, through its ecosystem connections and past investments, still has skin in the game. If DeFi trading platforms like Astar take off, they benefit indirectly.
A strategic bet on a potential rival. Interesting. And it's not just talk, there's actual money moving.
Big money. A wallet linked to Galaxy Digital reportedly scooped up over 61 million Astar tokens.
61 million tokens? What's that worth?
At the time, it was valued at over $119 million.
Wow. $119 million flowing into a token that was trading for pennies just days earlier. That's not retail FOMO.
No, that's a major strategic allocation. It reinforces this narrative of institutional players making big bets on this platform's future. It's a decentralized platform, but the story feels very driven by centralized forces and big money.
Okay. Crystal clear on Aster the DX. Now, absolutely crucial pivot here. For you, the listener, we need to switch gears completely to avoid confusion. Let's talk about the other project, Astar Network, ticker ASTR.
Right. Totally different focus. We're moving away from high leverage trading and into core blockchain infrastructure and ecosystem building. Astar Network is a blockchain specifically designed as a parachain for Polkadot.
Okay, parachain. For someone maybe not super deep into Polkadot's setup, what does that mean practically?
Think of Polkadot as the main hub, the relay chain, providing security and communication. Parachains are specialized blockchains that connect to that hub. They benefit from Polkadot's security, but can focus on specific tasks.
And Astar's specific task?
Its goal is to be Polkadot's main smart contract hub. It actually started life as Plasm Network, then rebranded back in 2021.
Smart contract hub, how does it achieve that? What's the tech edge?
The key is its multi-VM support. VM meaning virtual machine. It supports both the EVM, which is what Ethereum uses.
And most other big chains and layer 2s run on, yeah.
Right. And it also supports WASM, which stands for WebAssembly. That's often seen as potentially more performant and flexible for different kinds of applications.
So supporting both makes it easier for developers.
Much easier. If you have a dApp built for Ethereum using the EVM, you can basically port it over to Astar and the Polkadot ecosystem more easily. It lowered the barrier for developers to come build there.
Makes sense. And the native token, ASTR, what's its role in all this?
It's fundamental to the network. You use ASTR to pay for gas fees, transaction costs. It's also the governance token, so holders can vote on the network's future. And of course, you can stake ASTR to help secure the network and earn rewards. Pretty standard utility stuff.
But Astar has something unique in how it handles staking and rewards, doesn't it? This dApp staking idea.
Yes. This is probably their most innovative feature. It's designed to make the ecosystem sustainable for builders.
How does dApp staking work differently from normal staking?
Okay, so when you stake your ASTR, you don't just stake to the network in general. You specifically choose which dApps or infrastructure projects built on Astar you want to support with your stake.
Ah, okay, so you direct your staking power.
Exactly. And here's the kicker. A portion of the block rewards generated from your stake goes directly to the developers of the dApp you chose.
Oh, that's clever. So developers get a direct income stream based on how much support their dApp gets from the community stakers.
Precisely. It aligns incentives beautifully. Users get staking rewards, developers get funded for building popular and useful applications, and the network grows. It's not just reliant on grants or venture capital.
That's a powerful incentive for developers to build and stay on Astar.
Definitely. And they're expanding this idea. There's the Astar Collective, which aims to connect Astar with other ecosystems, like the superchain, starting with something called Soneium. ASTR is the main asset there, too.
And within that, there's another incentive layer, the ACS.
Yeah, the Astar Contribution Score. It's basically a way to measure and reward users for actually using the ecosystem, engaging with apps, providing liquidity, things like that. Right. Not just holding the token, but actively participating.
Rewarding real engagement. Interesting. Okay, so let's pull this all together for you listening. We started with one ticker symbol, Astar, potentially causing confusion.
And we've ended up clearly defining two very different, very sophisticated projects operating at a high level.
Absolutely. To nail down the key difference again, Astar is the token for the decentralized exchange focused on advanced trading perpetuals, stock derivatives, high leverage, hidden orders, very volatile, lots of institutional buzz, competing with giants like Binance.
While ASTR is the token for Astar Network, the Polkadot parachain, its focus is completely on infrastructure, making it easy for developers to build multi-VM and funding them sustainably through that cool apps staking mechanism. It's an ecosystem play.
Two distinct worlds, really. Trading versus building.
Exactly. And that connection we uncovered with the Aster DEX, the Binance competition, the YZ Labs backing, the XSTAP, it leaves us with a final thought to chew on.
Go on.
Well, the source material shows these huge centralized players like Binance simultaneously competing with and investing in their decentralized rivals.
Yeah.
It makes you wonder, what are the deeper strategic games being played here as the lines between CeFi and DeFi just keep getting blurrier and blurrier?
A fascinating question indeed, something for you to think about. Thanks for joining us on the deep dive, and we'll catch you next time.